I know. You're probably wondering why are there so many news alerts and publication about the importance of the Fed funds rate cut. And most people just think that it has to do with mortgages. And if you're not in the process of buying a new home, it doesn't matter. So both of those things are wrong. So Fed funds rate, which the Federal Reserve determines, directly impacts the cost that banks incur when they borrow money from the Federal Reserve. And those are short term rates. So things such as car loans, credit cards, and HELOCs are often tied to the short term interest rates. So if any of these things are going on in your life, this impacts you. So you might want to see if there's a better rate for your credit card. It might be a great time to refinance your car loan, etc. Because these are the things that have a one-to-one correlation with a cut in the Federal Reserve rate. So what about those long-term mortgages? The long-term mortgages are tied to the 10-year Treasury bond. And the 10-year Treasuries can have a direct correlation with the Fed funds rate, or it could stay the same or move in opposite directions, right? And you think, why is that? Well, sometimes the 10-year outlook on the economy is different than the short-term outlook. And that could be for a variety of reasons. And also, a lot of rates are not based simply on the rate that the federal government has. It could be based on the bank policies, it could be based on investor sentiment and what information was already priced into the market. And so it may or may not have that direct impact. The best thing for you to do is check in with your mortgage loan officer and figure out what kind of opportunities are best for you. So I often recommend that if you're in a point in your mortgage history where you've been paying on it for at least 6 months, sometimes a year, you can see if there's a better option for you. You may decide, hey, I want to pay off the mortgage early and switch from a 30-year to a 15-year. You may have had a major need for a large cash amount because there's a repair in your house, and getting a cash out refinance would help you do that repair or remodel. So it's good to check in to see what options are for you and if they make sense mathematically for you. So feel free to reach out to me if you have any questions on and see if there's a